All right, welcome guys. I'm with Matthew Morin, and today we're talking about how to invest in the real estate market as a beginner. So, Matthew, thanks for joining me here today.
It's great for having me. Thank you.
So, basically, let's say, I'm I want to start investing my money, right? Because, I realize that just having money in the bank doing nothing, it's not really helpful. So, why should someone invest in real estate over stock market, for example?
So, real estate is something that's tangible, right? It's something that you can go, you can touch, you can feel it, you can go visit it. There's something just beautiful about owning a piece of real estate, owning a piece of land. Um, I'll never say that real estate is a particularly better investment over another. They all have their pros and cons. But even in real estate, so the biggest con is that it's not liquid, right? Once you purchase the property, you can't just go sell it the next day. But at the same time, it's kind of a pro because it's almost like you're forced essentially um, to save that property, to hold on to it, let it appreciate. And so for new, beginners, people who wanting to get into real estate investing, so there's a lot of different ways that you can actually get into real estate investing. So, one of the areas that I focus on is actually multifamily, and I think that's one of the best assets, the safest assets, one of the best investments that you can do in real estate. But there's so many other options. There's people who purchase homes or condos and run Airbnb. There's cottages, same thing, Airbnb. Some people can buy single family homes as rentals. What else? People can buy what we call, there's small plexes or residential plexes. So those are multifamily properties. So usually those will be like a duplex, triplex, fourplex. Those are all residential. Fiveplex and up, so 5 units and up, those is what we call commercial multifamily properties. And the financing is different. So those are the properties that I focus on. I think those are the best types of properties. There's also industrial, commercial leases, but we won't go into that. What I love about commercial plexes is that there's no maximum in terms of how many doors, how many apartments you can own. When you own a smaller plex, it has to do with your debt ratios. So your personal debt ratio. So eventually you're going to get blocked. You can leverage, you purchase one property and then, build up some equity or optimize, you build up some equity. I won't talk about optimization for small plexes. It doesn't really, you can, but usually small plexes will work with the market value. So for example, you own a fourplex, you increase the rents. What else? You decrease the expenses. So your property is actually generating maybe better cash flow for you. But at the end of the day, if a fourplex down the street sold at an X amount, your fourplex is always going to be compared to that fourplex. Okay. Versus, let's just say you own an eightplex and you buy it and the rents are pretty low in it. The expenses are pretty high. You go in there and you value add. You renovate the apartments. You find new tenants that'll pay you a higher rent. Well, now you've just overnight increased the value of your property, and you can actually do that to then go to the bank. Hopefully, you're in a position to refinance, and you can actually pull out your down payment to go and then buy another property. But you're never going to get blocked. It's always going to be according to what the property's value and not your personal debt that you've acquired. Again, this is when we're talking about debt. This is obviously real estate debt. It's debt that's allowing you to maybe make a little bit of cash flow, but also build equity in properties. And there's different ways to make money in real estate. Again, like I just said, either through cash flow, through building equity, or through optimization. But again, that could be a whole other conversation.
Right. And so let's say someone who's like never invest in real estate, right? They're looking into it. They want to do it. They understand the value of it. But like, I'm sure a lot of people are wondering, like, how much money do you actually need to get started?
For sure. So I know for a fact, because I know I was there like 3 years ago, looking online, trying to figure out how do I get into real estate without spending any money or having little money to go and buy this multifamily property. And you will find a whole bunch of, I don't know what word to use, another word for guru, but essentially saying that you can buy it for zero money. So is that possible? I guess yes, it is possible. The ways that you would do that is either through leveraging other real estate that you already have. But again, we're at the beginning, right? So you can't do that. So the biggest way usually is for people, again, we use the OPM, so other people's money. But somebody's not just going to give you money like that, right?
Yeah.
So usually what you got to do is, one, educate yourself. You have to understand all the metrics for, again, focusing on multifamily, the metrics of the multifamily. So you have to understand what a cap rate is. You have to understand what the gross income multiplicator, the net income multiplicator. You have to understand the internal rate of returns. You have to understand all the information about a property so that you can present that to other investors who have the money but maybe don't have the time or the energy. All right, so in real estate, we actually call that a bird dog. So somebody who goes out, finds a property, analyzes it, okay, ensures that it's a good investment, and then they pretty much come up with, they create some sort of offering document that pretty much explains the revenues generated by this by a property, and they present it for investments, and then they create partnerships like that. And how you structure that partnership can be very different. So maybe since they had put up the money, but you're going to manage, you found the property and you're going to manage the property afterwards, dealing with all the phone calls for, you know, the plumbing leaks and, you know, whatever else, you know, you can maybe take 15%. So now you just owned, out of nothing, you just own 15% of maybe an 8-plex, and then all of a sudden it's, you know, or it's a 10-plex or bigger. But I definitely recommend either taking that approach or really educating yourself. And essentially to do that, there's lots of courses online, and or to go offer your services, let's just say to a commercial real estate broker, you know, so that you can learn how to analyze properties directly for them. Like, I would love that if somebody came to me and said, hey, Matt, I'd love to learn more about how to find properties. I'll help you out. I would share everything that I know in a heartbeat. For example, right now I have somebody who's essentially compiling every single multiplex in the West Island. You know, so they're going to learn a lot about real estate from there. So that's one way. The other way, that's probably the easiest way, is buying a residential plex, so duplex, triplex, fourplex. Going to owner occupy, so meaning you're going to go live there, and then you're able to put down a lot less money. So you can put in, let's just say 5% down payment versus 20, for example. Again, there's lots of little rules and more details. I'd be happy to answer anybody, you know, who watches this afterwards, but I don't want to go into too many details. But that's one of the probably the most common way somebody gets into you know, investing in real estate and in small plexes.
So let's say, you know, someone has money. Realistically, like, what would be the ideal amount to start off with? Like, is it 50,000, 100,000, or it depends?
It really depends. It really depends. Again, are you going into a partnership? And again, I really encourage anybody who's watching this to find partners. Obviously, you have to have trust in your partners, and you should all bring different skills to the table. Okay. But yeah, so maybe you'll need a little bit less money there, because the idea is to spend the least amount of money so that you can keep building and building. And especially for young investors, the idea is not really to focus on cash flow. Again, in my opinion, it's to not focus on cash flow. It's to keep acquiring, and focus on the cash flow later on in life when you're ready to retire and enjoy the fruits of your labor. So right now, the idea is to try to put it all back in as much as possible to keep growing. And in multifamily, that means keep growing the amount of doors that you have. Right. But yeah, there's a minimum. You definitely need money to get in. I won't lie. I won't hide it. It's very, very hard to get in with nothing and no experience. But it is possible. It is possible, especially if maybe, you can approach friends or family who, like I said, have some money, and then it comes down to evaluating the property. And again, that's something that I can do. Then I'll know exactly how much is going to, require to not only come up with the down payment, but closing costs, right? So when it comes to multifamily, there's always never forget the welcome tax. So that's something that everyone's going to have to pay after they purchase the property. But obviously there's the notary fees. There might be what we call like the phase 1 environmental test. There's obviously inspection. So there's different costs associated with getting your first property. And it's really important not to forget those costs. It's not just the down payment.
Right. And then let's say for someone who doesn't really, let's say, investing in real estate is not really their full-time occupation. Let's say they have a full-time job or they run their own business, right? Let's say, is it possible to not be dealing with like all the phone calls and, going repairing the toilet and everything on a Sunday night? Because I know for sure if I would be investing, when I will be investing in real estate, I wouldn't want to deal with all that.
For sure. And again, that's why there's a couple of different things you can do. Either you have somebody manage it for you for a price. It might be 5% of the gross income of the property. It could be more than that. So you can actually have somebody managing. It's really not recommended for once you have a low amount of apartments. But definitely once you get high up there, that's for sure. It only makes sense, or else you can't. You only have a certain amount of time. You don't want to be running around dealing with 80 tenants, because something's going to be happening every day. So that's the first way, is just to have actually somebody either there on site to help manage, or an outside firm that manages the property for you. Or again, finding yourself a partner, somebody who's a little bit more willing to go fix things, go collect rent, versus you just might be the funding behind the deal. So that's why I think there's partnerships are fantastic, because I think everybody has their own skill sets, and I think if the right people find each other, they can really grow something very nice together.
Right. So then would you recommend for someone starting out doing it themselves, so that way they learn it before they delegate it to a firm?
Oh yeah, for sure. 100%. You have to understand. And that's the way most people start out. It's especially young investors, 100%. Yeah, they're the ones who are going to go and respond to those leaking toilets, or at least be the ones taking the phone call to then call a plumber. And of course, it never happens during a normal hour. It's always in the middle of the night or something. But that's part of the game of multifamily investing. The entry is a little bit difficult, but once you're in, it's very easy to grow. It's just that first acquisition that's really the hardest, and that's why you have to make it right. The first one has to be right, so that you can then leverage that property to continue building the amount of doors or apartments that you own.
Right. So then how would someone know if they are having a good deal in front of them or not? Do you have like metrics people should look out for, or certain numbers, or is it in an area or specific location? Like how does it work?
So of course it's all about the numbers. So versus residential, that's a lot more emotional. Commercial can get emotional as well. You really, love a property. It just happened to me recently. It was a little bit heartbreaking to have to walk away, but the numbers just didn't make sense. As to the fact of, is there a specific number? I think that'll depend on the person and their investment criteria. But for example, if we're looking at a cap rate, so that's essentially in direct relation to the net income of a property and the purchase price at that point. So, and again, we're looking at only 1 year. So 1 year. but somebody might be looking at long term. So their investment criteria would be very different. And, they might, what we call the buy and hold strategy, where they'll hold for 5 years, 10 years until it starts making sense that they come into their money. But somebody might just be looking to buy something, be able to flip it a year later after optimizing it by increasing the revenue, decreasing the expenses. And again, that's a whole other topic of optimization strategies that we won't speak about now. But I think the numbers, it's a little bit tough. Of course, you have to know your numbers for the area, right? So a cap rate, for example, will be very different in Montreal, where it's less risky and your property is more likely to appreciate. So that's what we call like a primary market. So you have to know the cap rate, not only on the island of Montreal, but also maybe if you're looking at, I don't know, Lachine versus Villeray versus RDP versus downtown core, they're all going to have different metrics or criteria for that area. So to find a good deal, essentially, is you just have to find something that's slightly better than the surrounding area. But that's why some people are a little bit more hesitant to invest in Montreal, because prices are very expensive. So they'll go out to secondary and tertiary markets, which will have, again, a different kind of baseline. Again, we're just talking about cap rates. So let's just say a cap rate for, let's see, what are some that I was looking at recently? Sherbrooke. I was looking at Sherbrooke this morning. Their cap rate is 5.4. So if you're buying something that's a better cap rate than that, then you're happy, right? And that better cap rate will essentially be something that is a higher number, okay? Versus a cap rate in Montreal, it's more likely going to be in like 3.5s to 4, like 4. It probably won't be 4. It'll be like 3.5, 3.8, or yeah, so 3.8%. And so again, it depends on the area.
Got it. And then let's say someone finds a good, a good deal, right? Like, what are the first steps? Like, what do they do after that?
For sure. So hopefully, again, if they're working with a real estate broker like myself, we will then drop an offer. And it's really important to have an understanding now of not only your metrics, but how to drop a contract. It's really important to, when you drop a contract, that it's made so that you have things that obviously benefit you, right? That for whatever reason, let's just say you don't like the property after inspection, well, you have to make sure that you put specific clauses in your offer. And those are all things that obviously as a real estate broker that we're trained to do. There's different annexes, right? So there's a lot of the legality side next. So I would just say, get informed about contracts. So that's the next step, would be to make an offer on the property. Even before that, actually, is I'll usually take a drive. And that should have been done at the beginning, actually, is to drive in the area, because does the area look really run down, or does it look like, hey, they're building a whole bunch of stuff around here. There's a metro, there's other amenities, there's there's a grocery store, those are all things that are important, because people who are renting apartments don't want to have to walk or drive an hour to go get food. And again, these are going to be tenants that you're going to be dealing with personally at the beginning. So when you're purchasing a property, are you ready to be able to handle that type of clientele in that area, which will be very different in different parts of Montreal, and obviously off island as well. So that'd be the next step. Those steps: go visit, speak to any professionals. Again, like a real estate broker, you might have somebody who knows everything about construction. Maybe you'll get their advice as well. And then the next step would be to submit an offer. That makes sense based off of your calculations.
Right. And then to sum it up, would you have any recommendations, like books, courses, or resources online that you'd recommend for someone looking to invest in real estate?
Yeah. So there's a ton of great books out there. Off the top of my head, one book that I read recently is, I think it's called The Best Real Estate Syndication Book.
Okay.
And that has to do with a lot more about it's specific to multifamily, and it talks about how you can essentially it's pretty much from A to Z. How to evaluate the property, what are the things to look for, what kind of questions you should be asking, either a real estate broker or the property owner. And then it talks about how to actually approach investors to help fund the deal. So the partnerships, which they call a syndicated deal. So it's not 100% syndication, but it's pretty much similar to like what we've been talking about before, but it's very similar to that. So that'd be a great book. There's lots of great courses online too. I've actually found a few just on Udemy, looking at multifamily. Again, I've taken courses in real estate, but you're never done learning. I have so much to learn, and I'll be the first to admit it. One course that I haven't taken yet, but I'm definitely very interested in it, and I guess I can plug their school, but I'll definitely be a student eventually, is the MREX College.
Yeah.
That looks, I guess the person who started that school seems extremely knowledgeable. I watch all of his videos, so I'll definitely be a student of his in the near future. So that's pretty much it. All I can think of off the top of my head.
Great. All right. Well, thanks a lot for sharing your wisdom about, investing in real estate in the Montreal area, Matthew. Appreciate it.
Of course.
For you guys watching, I'll see you in the next video.